So I think we lost the connection, isn't it? Hello, Samya? So I was just, kept on teaching. I don't know when we lost. I mean, what time we lost the connection?
Yes, sir.
Okay, so, it was the sectoral funds we are talking about. Okay,
Sir, I
fine.
don't know, it might be like 2-3 minutes.
I'll just open the file. And sorry, I'm just going to share the file first because we have just started again. So I'm just going to share the file. So can you see the file? Shrishti, are you there? Okay, so I'm just putting out the screen now.
Yes, sir, I'm there. I can't see the file. I can only see a
Okay.
screen though.
So can you see the screen now? So we are
Okay.
talking about number 8. Have you heard about number 8, what I said?
Yes, sir.
Okay, so number 8 is sectoral thematic funds. Okay. Now here,
No, sir, you were
if you
muted.
invest in these funds, the fund manager is going to invest into sectors. Suppose you are very bullish on banks, but you don't know which stock to buy. Should I buy, ICICI Bank or HDFC or Kotak Bank or Axis Bank or any bank or State Bank of India? So you don't know. So what do? You buy a fund which is investing into all banking stocks. So that particular fund is called sectoral or thematic fund. Okay, like we have IT fund, pharma fund, okay, infrastructure fund. So these funds are going to invest into those companies which represent that particular sector. Now I was telling you about the IT sector. Okay. Now IT sector, which are the companies in IT sector? Can you name any company in IT sector? And yeah, TCS. So you look at. Are you able to see the screen here?
Sir,
So we have
Infosys,
TCS, Infosys,
TCS.
HCL Technologies, Wipros. Okay. So let's talk about TCS.
Yes, sir.
So what has happened to TCS? So today, what is the kind of this thing? How much it has come down today's stock? Look at the red number. Can you see that? Huh? 3%. And look at say Infosys.
3%.
So
3%.
Infosys has gone down by how much? And let's say Wipro, how much it has gone down?
2.64.
Can you tell me what is the reason? Because when you invest in thematic funds, they're riskier. Okay, and if anything
2.17.
happens to the sector, any bad news related to the sector, it can impact the whole industry, and you can lose a lot of money for at least for a few weeks, or few days, or few months. So what has happened to the tech sector? What has happened just a day before, or 2 days back? There was some announcement somewhere. What was that? In America, Trump has passed an order. Any idea, Shrishti? HB1 visa जो है, that has been, all the new people
Is
who
it
are
the
going to
EB1
join
visa
in
issue?
US under this visa, the company has to pay $1 lakh. Okay. So originally, it was announced for all the people, even who are working in US. But then, after 18 hours, the clarification came that it is only for from the new year or from today, okay, or from 21st of or 22nd of September, anyone who comes to America under this visa, so the company who's hiring has to pay 1 lakh US dollar to the government of America. So it has dampened the spirit of all the IT sector, and the IT sector is going down. Okay, fine. Is that okay? Have you got it? So now, sectoral sector is sectoral sector, thematic
Yes,
sector is
sir.
riskier or less risky? It is riskier. Okay, unless you are very sure, you should not put your money into sectoral funds.
So
Then we
it's
have
riskier.
contra funds. Okay, contra fund is basically the fund manager feels or he has a contrarian view about a particular sector. Okay, like for example, about 5 years, 7 years back, all the pharma companies, they were like for example, like now IT companies, they are cracking. So maybe after a month, somebody will have a contrarian view that the IT companies have lost about 10 to 20%, and now they are going to bounce back. Okay, but the market believes that there's some more, kind of a selling which may happen. So the fund manager will have a contrarian view. Like about 10 years back or 5 years back, all the pharma sectors, they were not doing so good, and they have cracked by about 30 to 40% from their, values. So there was a belief that the pharma sector is going to do well thereafter by some of the fund managers. Okay, so one of the fund managers, he called me and said that please invest in pharma. So I said, pharma is doing very bad. It's falling every day. He says, no, maybe that will fall for a few days or so, but it is going to bounce back. So I had invested about 5 lakh rupees. And in 3 years' time or 2 years' time, it doubled. Okay. So that is called contrarian view. Okay. Just read the definition and features.
Invest against prevailing market trends, focusing on undervalued stocks expected to bounce back. Contrarian strategy. Invest against prevailing market trends, focusing on undervalued stocks expected to bounce back. Contrarian
Okay, fine,
strategy,
fine,
long
fine.
term
Suitable
horizon
for
needed,
experienced
higher
investors.
risk
Okay,
but
fine.
potential for
Now,
strong
then we have
returns if
the 10th
bets
one,
succeed.
focused fund.
Experience.
Okay, that means here the fund manager is not going to invest in many. Like, the Nippon India, which is one of the best performing large cap fund we observed. I mean, on the last class, which is giving around 16% return in a large cap category. It has about 64 stocks on which it has invested. So most of the fund houses, they invest about 60, 70, 50, 100 stocks. So they are going to just focus in 30 stocks, maximum 30 stocks. It's called focused funds. So this is as per the SEBI guidelines. Okay. Then we have the 11th is called the value fund. Okay. So now value funds are basically the funds which is not trading at a very low value. It is trading at a very low P multiple, but has a great future. Okay. So they are undervalued, I mean, compared to their intrinsic value, but they are going to do very well. Okay. Like, for example, Infosys about 20 years back was trading at a very low P multiple. So somebody found that Infosys is going to do very well in next 20 years. So it was a value fund managers, they invested in Infosys that time. So it's called value fund. Just read the first two lines.
Invest in stocks considered undervalued compared to their intrinsic value. Seeks long-term appreciation. Invests in stocks considered undervalued compared to their intrinsic value. Seeks
Okay.
long-term
Then we have,
appreciation, may
we will have a
underperform in
break after
short-term
2
bull
minutes.
runs,
So we have
but
a
deliver
flexi
over
fund.
longer
Okay.
cycles.
So what is this fund called, Shishti?
Flexi cap fund.
Okay. And what is this fund called? The top one?
Multi-cap.
Okay.
Flexi
So
cap
then,
fund.
I found, I was, under the impression that both are same. Okay. So,
Multi-cap. Different because in multi-cap there has to be a particular amount of allocation, sector allocation you have to do to. So they're different because in multi-cap there has to be a particular amount of allocation, sectoral allocation you have to do to large cap,
absolutely, you're absolutely
mid cap, and small
right.
cap.
The key
Whereas in
difference is
flexi
I've
cap,
just put
like
it on a
it
from
depends
I
upon
just
the
got
fund
it from the
manager.
chat GPT. So the key difference flexi cap is that there is no cap. You can invest either in large cap, mid cap, small cap, but 65% of the money should be invested in equities. Okay. So when you give your money to a fund manager under the flexi cap, he is going to choose, which fund is going to do well, either the large cap or the mid cap or the small cap. He may choose to, put all your money in large cap if he believes that the mid and small caps are going to underperform. But if think the large caps are not going to do well, he is going to put your money in mid and small caps. So it is entirely his decision to where to put the money. Whereas multi-cap, which you rightly said, that there has to be minimum 25% allocation in each category. 75% money should be in equity, 25% in each in large, mid, and small caps. Okay. Now, which fund is more riskier, flexi cap or multi cap? Shrishti?
So I think multi-cap.
Yeah, just read the risk in third line.
So I think multi-cap. Moderate to high for flexi-cap, multi-cap high due to forced small slash
Okay.
mid-cap
Absolutely. So what you
risk
said, your guess
moderate to
was
high for
right. If
flexi-cap,
the fund manager
multi-cap
is going
high
to
due
put,
to forced
some money
small
in
slash
small caps,
mid-cap exposure.
if he doesn't have the belief that small caps are going to do well, so he has to put at least 25%. Okay. Or if he believes that large caps are not going to do very well, but he wants to put in mid cap and small cap, but he has to, by force, he has to put at least 25% in large caps. So the which funds would be better, flexi cap or multi cap, according to you?
Flexi-cap.
Now, it is a flexi cap. So whenever there is an uncertainty in
Flexi
the
cap.
market, then go for flexi cap. So now we are moving back this thing. Okay. So now, yeah.
Sir, I have a
Huh.
question.
Okay.
So
So
what's
fund
the
and funds
difference
is
between a
basically
fund
coming
of funds and a flexi
in
cap fund?
others.
Like
Okay.
in
So
terms of
where,
risk
it's
allocation,
called
it
fund
can
and
be a
funds.
same
Can you see
thing.
on the slide?